Remedies is the one that we're talking about. It was a subdued Q1 FY24 performance for the company. The profit was lower due to a weak operational performance and margins continued to be under pressure. It was sub 15%. The company also witnessed a decline in the US business. It was down over 20% on a year-on-year as well as on a Q-on-Q basis. Aditi Kare Panandikar, who's the MD of Indoco Remedies, joins in now. Aditi, hi, welcome to the show. Good to see you after a long time. Well, it was a subdued quarter in terms of the geography's performance, but I just wanted to start with the US business. Wanted to understand what led to this over 20% decline this time round. Was it because of the official action indicated status on two of your facilities which you were issued? And separately, was it because of price pressure?
So I'll answer the last question first. No, it was not because of price pressure. As you rightly said, two of our facilities, which are incidentally part of one FEI number. So just one site is under OAI, and this is a sterile site manufacturing injectables and ophthalmics for US. And as such, it is just an OAI status, and there is no impact really on regular supplies. But our quality management system requires us to be very transparent with our front-end partners, customers. And a large part of this quarter has been about making them aware of what the OAI status means and asking them to review the risks they see and for lifting the product. So it is just a glitch, a one-quarter glitch, and I expect US revenues to be back to the expected levels in the second quarter.
By expected levels, you mean close to 280 to 300 crore for the full year? That would imply roughly 75 to 80 crores per quarterly run rate. Is that likely from the next quarter?
Right.
And there is no risk to... go ahead.
So quarter two might be a little on the lower side since we are still, post the OAI status, the company has been very actively interacting with the US FDA. Wanting to understand very clearly why four observations should have resulted in an OAI status, because there was no data integrity. There was nothing really which seemed very critical. But FDA has shared certain concerns, and we are in touch with them constantly to understand this better. And we believe we will be able to turn this around very fast. Work has already begun towards that. End of August, we are hoping to get a one-on-one with the FDA so that we can be sure that we are on the right track towards remediation.
Okay, so you're not expecting an escalation beyond an OAI, beyond an official action indicated status for this plant?
I would be very surprised if that happens. No.
Okay, and in terms of approvals from this facility, how many were pending? How many were you expecting in FY24? And now, because of the OAI, how much is delayed?
So we were expecting about 4 to 5. And what I'm seeing is a delay of about a couple of quarters on account of this. So probably by half year, things will get postponed. As such, there are currently injectables ophthalmics being manufactured already from the site, and those will continue. There is also a solid oral site which makes allopurinol tablets, lacosamide tablets, and that will continue. So current running commercial supplies will not get impacted. In fact, most of our customers have shown a lot of confidence after understanding the nature of the observations. They have preferred to pick up the products. So I don't see much concern with the supply side. What will get postponed? What will get postponed is possibly a few milestones we were expecting based on approvals coming in.
Got it. That's about the top line. Let's talk about the operational performance. I mean, that has been a bit of a sore point as well. Margins in the past have been, upwards of 20%. You've cut down your margin guidance from 18-19% to 17.5%, but now it's below 15% as well. What led to this margin pressure, and going forward, do we expect any recovery, or is there more downside risk?
So let me clarify first. The downward guidance is because of the first quarter at 15.5%. And I'm very sure we'd be able to do close to 17.5%. So what has caused this kind of margin pressure? The single largest component really is a drop in sales. While US is down 21%, it is one of our good profitable markets. India business also, acute therapy has not done well because the season did not come in. As you all are aware, trains were postponed by about a month, and the category has shown that kind of performance. So have our products. We are very fortunate that in India, two of the other broad categories we are in. One is the subchronic, which is largely composed of dental, ophthal, gynac, ENT kind of support. Those have done very well. The dental portfolio is growing at higher double digit with Sensodyne, Sensodyne K, both the toothpaste clocking 20 and 30% growth. So those categories are all fine. Chronic is a very small part of our portfolio, but that is also done well. So it is the big blockbuster products like Febrex Plus, Oxypod, ATM, two antibiotics, one anti-cold, Carvol Plus, which have not really kicked off the way they should have because of the delayed monsoons. That has also impacted. But in addition to a drop in sales, the margins, I believe, I'm sure have been impacted because of certain one-offs also. So there have been certain arrears which have come in because of an agreement which was signed off with the operators in Goa, and some amount of remediation costs for US have also come in. These are not really recurrent in nature. So I'm very confident. We had thought 18% should be surely possible. I'm now saying 17.5. Hope to surprise you.
Okay. Well, Aditi, before we wrap this up, I just wanted a larger picture from you with regards to this Goa facility, this sterile unit, because if I'm not mistaken, it's the same one which was issued a warning letter in 2017 by the US FDA. So this is probably the second run-in on a regulatory basis which you've had with the US drug regulator. So from that, on a larger picture, what can you guide investors? Is there a little bit of a concern when it comes to compliance, and how confident should investors be for you to be able to remediate this sterile facility again?
Yeah. So let me start with the first warning letter because I'm sure a lot of people have forgotten about it. It was entirely for very different reasons. It was related to a product we were manufacturing at that stage for Econ, and it was related to certain packaging component related issues which were causing some problems for integrity of container closure system. We came out of that warning letter, by the way, in just 18 months, which was one of the fastest any company has done. And this time around, in fact, the OAI status, it is not a warning letter this time. I want to make it very clear.
Yes.
It's not a warning letter. It's a shift from VAI to OAI. And that has come, I think, because the authorities are being very, very cautious when it comes to specifically sterile products. There were 4 observations, 3 of which were pretty generic. One of them expresses certain concerns about, people behavior in sterile areas with the anticipation of expected issues if and when kind of. So that nothing really has happened. The site has been regularly looking at through our QMS systems. We now have a trackwise system. So the quality department, the compliance department are on top of it. And I would like to assure investors that this time around, OAI doesn't mean under any circumstances an escalation to warning letter. So it's a very different thing. We would like to improve in areas that the authorities expect us to improve in. And I'm hoping by end of August, we get a better understanding of that. So we can turn this around much faster.
All right, Aditi. Well, we wish you luck. Thank you very much for joining in and speaking with us. So that is Indoco Remedies. The stock has corrected around 20% from its 52-week highs. Stock is a little subdued post its conference call. Well, time for a